Welcome, everyone, to our Industrial Advisors podcast. Today, you have Bill Condon and Matt McGregor, as always, and we are going to cover the 2020 review and talk a lot about 2021 forecast and predictions. So, Matt, why don't we start with 2020 and kind of some of the big takeaways in 2020. I think that a great place to start is just, the growth of the big companies. The big companies have definitely thrived. And honestly, you look at the South End market, you look at Tacoma, you look at Lacey, you look at DuPont, we'll get into it. Some of the stats, those markets have been on fire with big tenant activity. And a lot of those smaller and mid-sized companies taking a hit.
Yeah, there's no question that's kind of the takeaway of 2020 is huge expansion of pretty small handful of companies, 15 top companies, and then the smaller guys really, really getting hit. And you're seeing that obviously where the small companies are both in South Seattle and the North Valley. So we're seeing, again, some negative absorption there, but huge absorption down south.
Yeah, and obviously a lot of that is e-commerce driven. The stats show that we've hit levels this year that we weren't projected to hit until 2025. And so e-commerce, 3PL companies, they are taking a lot of space right now.
That's right. 2019, if we recall, was about 19% of all retail sales were online. And to your point, we've already hit 2025 predicted numbers, and it looks like it's going to come in at about 34%. Huge growth.
You bet. And that obviously will continue to be sustained and grow even more, given once people start going e-commerce, they typically don't go back, right?
That's right. And that plays right into, there's only a handful of companies that are good at that. And so, unfortunately in 2020 and probably years to come, if you don't figure that out, you're going to shrink and disappear. And that's why we're seeing very few companies take up all the square footage.
You bet. And so let's dive in a little bit further to the South Sound. And so when we talk about South Sound, we're talking Frederickson, we're talking Lacey, we're talking DuPont. There has been a bunch of deals that have gotten done here in the last 6 months there.
That's right. Well, actually stretching now all the way down to Winlock with the Lowe's transaction. I'm not sure of all the reasons they went down there, but if you look at the South Sound and you hit all the regions, what we would consider now South Sound, interestingly enough, and we've talked about this, if you went back 2 years ago, you would not have said that was part of our market. You would have said that was a secondary, tertiary market. And now all the major absorptions down there, and in those markets specifically, Frederickson, DuPont, and Lacey, it's strange to say, but we're kind of running out of opportunities in those regions.
That happened so quickly. You think about, years ago when Sumner started getting built out, right? That market took a while to get built out.
It took 10 years.
Yeah, and now it's a phenomenal market. But boy, yeah, to your point, it seems like Best Buy was like the first big deal that went to Frederickson. And then since then, you have had dozens of deals go down there and get inked. You look at some of those deals, Home Depot for 1.3, Amazon did 650 in DuPont, right? Snow Joe's just did a big deal. Ace Hardware, Lowe's. A bunch of tenants have gone down that direction.
That's right. And the activity's down there right now. And so you're going to see the market, that South Sound push, obviously south of Lacey and DuPont, because we just don't have a lot of opportunities to house these big companies. Now, I would say for the first time in several years, we're seeing now some sites come into the valley, but they're spoken for already, right? And so I was really interested in going, okay, once we have some sites that could house some large buildings, will that activity continue down south, or will those tenants pay up to be north? And the answer, both.
Both,
right.
Absolutely, yeah. If you can find it in Kent, right, it's going to lease.
Yeah.
And so
I hear the Boeing site is, pretty much spoken for. I hate to say that, obviously it's not leased up, but there's enough activity on it that I'm hearing that it could be pretty much spoken for.
Yeah, absolutely, and that's not surprising at all, right?
Sure.
And I'm sure those rates are really healthy rates.
That's right.
And rightfully so. So talking about Kent, so we've mentioned that the South Sound activity has been off the charts.
Crazy.
Good. South Seattle and the North Valley, which are generally smaller tenant markets, have struggled a bit.
This year and really, if you look at the last 3 years combined, and we're going to get into statistics here, just keep in mind you guys are hearing this podcast before the end of the year, so we wanted to be first out the end of the year numbers. What's crazy is it has been a challenging year, but now you look at it and it's been kind of 3 straight years of negative numbers in those markets collectively. There's been good quarters and bad quarters, but collectively you've had negative absorption in South Seattle and the North Kent Valley for the last 36 months. So do you think that and we'll get into predictions later, but what do you think of that and why?
Well, as you know, I love the North Kent Valley.
Yep.
I mean, if I pick a place where I owned a building, I would pick the North Kent Valley. But yes, it has struggled this year. I think a big part of that, when you look at the numbers, is simply because of those big tenants that were in 24-foot clear, product in North Kent or Tukwila or Renton have moved south into that 30-foot clear. They have gone to Sumner. I mean, we've seen a trend of Kent Valley tenants move to Tacoma, move to Sumner,
That's right,
and move south. And so, the bread and butter of the Kent Valley is your 20 to 100,000 square foot tenants, and a lot of those smaller tenants and mid-sized tenants were more impacted than the larger companies through COVID.
That's right. And I think, South Seattle just doesn't have as much tenant velocity to backfill those spaces if they do go vacant.
That's exactly right. Yeah,
Right.
It's not that deep of a market there.
That's right.
And, a lot of those tenants in the past already moved south, right, to Des Moines or to the North Valley. But in looking at the stats, I mean, our vacancy is up to 7.2%. And when you break it down a little bit, the Kent Valley vacancy is up to 8.2%. It was 7.3% prior quarter. So, that's a pretty big jump in vacancy.
That is a big jump. Of course, we'll get into total construction, but a big reason for the collective vacancy is the amount of construction going on for sure. But you're right. It's continuing to creep up. I mean, a couple years ago, we were in the high 4s, and now, we're in the low 7s. So quarter after quarter, we're seeing this trend continue. We'll get into predictions. There is great news there, but we have seen quarter over quarter now for quite some time of rising vacancy rate.
Yeah, a couple things I think to note on just real quickly on the stats. So our absorption looks to be about 1.6 million feet, a little bit lower than our typical 2.3 million feet. But again, so many big deals that are out there. Next year is going to be a great year. We'll get into that.
Yep.
Capital markets, will be about $1 billion for the third straight year. So we're down a little bit from 2018 and 2019 numbers. 19 was a record year.
Yeah, both those years back to back were almost 1.5 billion. If you remove the last 3 years and average it over 10 years, we're about a $600 million market. Now in 2018 and 19 back to back, you did almost 1.5 billion. So almost 3x normal volume. We thought going into 2020, I mean, you want to talk about wrong predictions. We had the excise tax change. We had 2019 December alone being 600 million because everybody's trying to cram that in before the excise tax change.
Yep.
Then COVID hits, right? And I'm sitting here telling you, and I'm going to be the worst capital markets year ever. And here we are at $1 billion.
Yeah, I think it's a little bit misleading from the standpoint of a lot of those sales were portfolio sales that were, some buildings in a market that were included. So
For sure.
There wasn't as much velocity when you think about, the one-off deals that were $20 to $40 million. There wasn't a ton of that activity this year.
No, you're totally right. When you pull out those numbers, and certainly we will when we get the final here in a couple of weeks, but the pending transactions that's going to happen in December and the already closed ones, which is already about 940 million, we will just touch over $1 billion in total sales. And to your point, Bill, I think over half of those are portfolio.
Yeah. So, when we look at the pipeline from a construction standpoint and what's been built, we have about, over the last 2 years, about 10 million feet of product that's been constructed. There's only about 3 million of that remaining, and with the tenant activity that's out there, that will likely soon be gone.
And then, of course, you add to the 3 million of completed construction, you add about another 3.3 of under construction that's available. Under construction is a big number, 5.2 million, with 3.3 million of that still unleased. So you put those two together between what's going to be been completed and not leased and what's being completed now, you've got over 6 million feet into a market. On the bad news is that we only had 1.6 million feet of positive absorption. So just on those numbers, you'd think, oh, geez. But what we're going to get into is it's kind of a crazy market, and that's going to be absorbed pretty quick.
Yeah, well, let's jump into that. I mean, 2021. Let's talk about what 2021 is going to look like. I am as optimistic as I've ever been when it comes to what that year is going to look like. And I think it starts with the large activity that's out there, right? We've seen a bunch of deals get done already, but we've never seen the tenant activity above 500,000 square feet like we have right now in the pipeline.
No, we were going over those details in preparation of this podcast, and just taking out the fluff, I think you have about 6 million feet of real deals, and the 1.6 million feet of positive absorption in 2020 is grossly misleading because of the amount of commitments, signed leases, and things that have already happened that would have pushed that number considerably more, that obviously will be recorded in 2021. So I think just right off the get-go in 2021, we've got somewhere around 3 million feet of deals that I would say are either signed or about to be signed that will record in Q1, Q2, just right off the get-go, that were really obviously deals that took buildings off the market in 2020, but you can't count it.
That's right. And there's another, call it 3 million feet of deals that are out there that will probably get done as well.
That's right.
It's going to be what we think is a record year from an absorption standpoint in 2021. Talk a little bit about where you see that activity. I mean, obviously Tacoma South has, continued to see the majority of that activity, and that should continue.
Yeah, I mean, I think when this year records, if you look back on it, you're going to see a huge change in the absorption numbers Tacoma South. I actually think that 2021 from Tacoma South, including all the markets we described as south of Valley, it could be, somewhere around 80% of the entire market's net absorption delivered. That could be thrown off a little bit by the Puyallup Nation site. Mm-hmm. We know there's a deal tracking there that could take a big chunk of square footage and shift that number. But excluding that deal, you could see upwards of 80% of the total market's absorption being Tacoma South.
Yeah, we know that is as rosy as it's ever been, right? And, there's now a bunch more players at the table that want to be in those markets from a investment standpoint, right? In the past, there was a handful. Now it's part of the valley, right, for the most part. I do want to go back to the Kent Valley because they certainly got hit a little bit this year, but I think 2021 will be the return of the kind of mid-market strength, and that the Kent Valley vacancy will go down. There's going to be a lot of activity, I think, towards the end of Q1 as we enter into Q2 in that 20 to 100,000 square foot range. And the reason I say that is because, again, those companies got hit pretty hard with COVID, right? And impacted greater than the bigger companies. I think that with the vaccine, it's going to give people more confidence, and we're going to see, again, a good amount of activity driving deals in that North Kent Valley market here as we get into Q1 and Q2 of 2021.
I couldn't agree with you more. I think it's interesting that our close-in market has not done well in comparison to our market at large. When you look at other markets in major metropolitan cities, New Jersey, New York, San Francisco, their close-in markets are so tight and very difficult to get product, where in our market, it tends to be, the last couple of years, the opposite, right? Slower up north. And I do think that will change. I think that's going to change with e-commerce, with small companies rebounding, figuring out how to do things online, and wanting to be close to rooftops.
Agreed. I totally agree. And so I think we're both on the same page from a activity standpoint, not only in the North Valley, but obviously continuing south as well. I do want to touch on the capital markets side real quick. We sold a building a year ago in Auburn at a 3.88 cap. Yep. And, most of those leases, there was a 5-year lease in place, a 7-year lease in place, and 10-year lease in place, right? So it's not like you were getting to that role anytime soon. But I would say today, that same building, there would be no discount. There is just as much demand, just as much aggressive capital to be in our market as there's ever been.
Oh, I think it would go south of the 388.
Yeah.
I do, because to get a core fully leased asset, well-built building in a major market, to our point earlier, it's really becoming very difficult to find those transactions outside of portfolio sales. And so I think if we had brought that back out today, you'd at least see a 10 bip discount on it.
Yeah, and it's interesting because when you look at industrial, right? Industrial is now where everybody wants to be. So you not only have all the groups that were, trying to buy product that have always been hot on industrial. You have groups that previously were focused just on office or multifamily or retail, now wanting to place more capital in the industrial space. So, and in our market in particular, when you look at the core markets, right, that are out there, there's even more aggression to be in those markets because there's more stability there.
That's right. I think capital markets in 2021, you'll see a lot of land trade hands as developers are coming in here in a hot market, especially down south. I think you'll see a lot of the dollar volume trade in land, less in buildings, because, what are you going to buy, right? And so sellers are struggling with selling these assets because they're having a hard time placing that money. I grossly missed last year's prediction, and I'm going to say it again. I do think it'll be a slower year on capital markets, but a big year in land.
Yeah, I agree with you. I mean, certainly there's still continued aggression to be here. It's just, as we've become more institutional, not a lot of those groups want to sell. We do have a nice sale closing in early January in Seattle for about $75 million, so that'll be a good start to the year on the capital market side.
For sure.
So all in all, 2021 looks really strong on the industrial side for our particular market.
And 2020 was pretty good.
Yeah.
If you would have thought, in April, May, we would not have guessed that.
Absolutely. It's industrial has definitely flexed its muscle in our market, and so we're thankful for that. Let's talk about something that's probably more important. Who's your Super Bowl prediction?
Well, I've thought a little bit about that, and I actually think that the Saints will come out of the NFC, and the Titans will come out of the AFC, and I think the Titans are going to be the Super Bowl champs.
Okay, there's probably a lot of people laughing right now saying Matt does not know what he's talking about. I will tell you what the Super Bowl is going to be. It is going to be the Seattle Seahawks.
Shocker that you think that.
Yep, versus the Buffalo Bills, and the Seahawks will win. Russell Wilson is going to go on a streak that will be the best streak he's ever been on in his entire career, and he's been on some streaks, right? So he is about to go next level, carry the Hawks to another Super Bowl win. You heard it here first, so I want everybody to remember that.
I'm shocked that you're predicting this.
Yeah.
I just have one question to finish this up. And when is the last time that you did not predict that the Seahawks would go to the Super Bowl?
I don't know, but they've been to the playoffs every year but one since Russ has been the quarterback. This is the year. So this is the year. So we want to wish everybody happy holiday season. Hope everybody has a Merry Christmas and a Happy New Year. And we're just really looking forward to a great 2021. And we're certainly thankful for all the great relationships that we have developed further in 2020.
Thanks, everybody. Appreciate a great year. If you haven't hit the subscribe button, hit the subscribe button and be notified of future podcasts. Thanks a lot.